Right, you are watching Stockwatch. I'm Zinati Kuma, and joining me to unpack your stock-related questions today, Ricus Reeders from PSG Hole-in-One, Ruimsig, and Pierre Verster from Protea Capital Management. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X at Business Day TV using the hashtag Stockwatch. Thank you so much for your time, gents. I'm not going to touch on anything macro that is happening because these are just recurring themes and, of course, people digesting Trump's tariff mania. But actually, on the macro front, I do want to talk about AI because we are now seeing Elon Musk trying to make a bid for OpenAI. I must say, I didn't see that one coming, even though he was one of the early investors there. JP, talk to me about what's playing out here.
I mean, Zinati, AI is where all the action is. There's a lot of money going into AI. Obviously, OpenAI were the pioneers, and as you say, Musk was a co-founder. Basically, at the moment, it's still a foundation and non-profit. So even though they've got agreements with Microsoft, technically, OpenAI is not allowed to make a profit because it's a non-profit. And between Elon Musk and some of the co-founders, some of the other co-founders are trying now to convert OpenAI from a non-profit into a company that is allowed to make profits. And it does seem like Elon Musk is just putting a spoke in the wheel by saying, well, maybe he'll buy the non-profit and maybe he'll then convert the profitability in the background or combine it with his own XAI company. So it's interesting. It's typical Musk. He likes to throw a spanner into the works, and we'll need to wait and see. But yeah, I still think there's enough players around that we'll probably continue to have a lot of these different players, whether it's OpenAI or XAI or DeepSeek, trying to create even better large language models because there's a lot of money and a lot of opportunity in the AI space.
It's quite interesting because I think also when he first came out with kind of wanting to buy Twitter, a lot of people didn't really take him seriously until everything became serious and he did eventually buy it. On your side, Ricus, because I mean, just looking at all this action that is happening in the AI space, it's quite clear that that is where there's a lot of money to be made. At this point, do you think that it signals still more upside in that AI space?
Well, let's just talk about Musk. It's the one thing he missed was AI. Maybe XI or whatever he calls it catches up. And it's not about money for him, it's about ego. I think it would be the most incredibly dangerous thing in the world for the richest man in the world to get control of OpenAI. Take him at his word. If he says he wants to buy it, he's probably making plans to buy it. He's just bought a government. I hope that doesn't go through. I'm serious. I'm not joking.
Yeah. Yeah, I know. It's quite an interesting space to be in at this point. So we will see how everything plays out. Gents, let us get to the questions that have come in, particularly on JSE companies. An interesting one is Bell Equipment. Should I buy Bell shares? I do remember that there was a lot of movement last year because the founding family was trying to take the company private and really trying to buy out minority shareholders, and that did fail. But also not really coming out with great numbers in their trading statements. JP, what's your view on Bell Equipment?
Yes, Zinati, so at the current 40 Rand, there's still a little bit of a potential deal premium in the price, I would say, because of that disappointing trading statement you referred to. It means that the shares aren't cheap relative to the short-term earnings. So the fact that I think the offer was at 54 Rand, trading at 40 Rand.
Yeah.
If we do get another offer later this year, it probably needs to be higher than 54 Rand. But if the results are weak, maybe the family says, well, maybe we wait another year, wait for the results to be even weaker, and people getting a bit of a fright. Maybe the share price will drift down, and then later on, if you make the same offer, people are like, yes, please, 54 Rand, I'll take it.
Yeah.
Don't walk away again. So
Yeah.
I do think that if you are a patient shareholder, I think 40 Rand is a reasonable price to pay, notwithstanding the fact that in the short term, there might be some pain regarding the operational performance, because longer term, I do think if you look at the net asset value of the share and you look at the prospects of the company longer term, I think there's value even when you buy at 40 Rand.
Yeah, I mean, just as a a person who actually is not invested in Bell equipment right now, who would like to get in, would it be a good idea to get in, particularly with the results being this week, Ricus?
Well, I can only echo what Jean-Pierre's just said. There's a lot of maneuvering, I think, going on at board level and at family level. So the price will react to just the possibility of news. But as a business, again, I agree with Jean-Pierre. Longer term, I think it's not a bad place to be if your interest is in moving soil and stone around as far as their business is concerned, and they've been doing it for a very long time and doing it very well. So if you can ignore whatever family and shareholders and boarders might be doing in the background, longer term, yeah, I'll be quite comfortable holding it.
All right. Well, let's get into Cashbuild. Your thoughts on Cashbuild as a buy? I think in the last year there has been some appetite for Cashbuild, and actually I think the last trading update seemed to be signaling improvement in that market. But is it enough, JP, for someone to go in on Cashbuild to buy?
Yeah, an interesting one around 200 Rand a share. I mean, if you go back 2 years ago, after they bought P&L Hardware, they really, unfortunately, did not make a good deal there. And just after that, we had very strong demand for household improvement, like, brick, cement, roof covering, tiles, all of that fall away after COVID. And that really hurt P&L, together with very cheap imports. But often imports that are not even SABS approved, that found their way into the market and really decimated the lower end of the market where P&L Hardware was operating. So the core Cashbuild business has been struggling a bit, but it's more the P&L business that has really dragged the group's performance down. And in the last few months, you saw a little bit of an uptick, a little bit of positive revenue growth. I'm sure the two-pot system helped. I think a lot of people that made withdrawals said, well, let me maybe improve my house. Let me send some money home to family members. Let them improve their house, perhaps. So that does look positive. You probably need a few more data points to really believe that we've seen a turnaround and that structurally there's going to be increasing spend on household improvements. But again, at 200 Rand, I think that's a fair price. You're not paying too much if the turnaround comes. And if it doesn't come, you wouldn't expect too much weakness in the share from 200, because it is a level that, relative to normalized earnings, I think is a fair price for Cashbuild shares.
I was actually at a Standard Bank presentation today on the economy, and there was a data point there that kind of pointed to people spending more money on services rather than durable goods, and where people just want experiences. And I'm thinking that obviously home improvements also falls into that category, that people are spending less. Just on a long-term point of view, Ricus, I mean, how much upside could there be in Cashbuild, considering the shifts in attitudes and spending patterns that we are seeing in South Africa at the moment?
Well, in the longer term, it's going to be tied with what's happening with the economy. You get an uptick in GDP, and by default, things like Cashbuild, which is to do with improving not merely the experiences, but the circumstances in which you find yourself, whether it be building a new room or making addition to a house or an improvement. But as JP said, I think this price ran up from its lows a few months ago, about a 70% increase in price. And that was in anticipation of a combination of GNU, the new come into national unity. Then you had the added sentiment of the two-pot system, and the price ran away a bit. Turn it around 200, and it's about 20% down since then. But I think, considering that, never mind a year ago, but about 4 years ago, it was trading at 360 Rand. There's, it's come a long way down, but it's leveled out, and everything else being the same, picking it up at sort of the 190, 180 level, I think is not a bad idea if you're still positive about hopefully improved local growth.
All right. Well, before we go into the break, let's talk about Remgro. How's the discount to NAV unlocked at Remgro? They did quite a lot of corporate action a while ago. JP, is more expected from Remgro at this point?
I would hope so. This discount has persisted at wide levels, and it's increased to a large extent. They tried to address it somewhat by taking Mediclinic private. That hasn't really helped. It might even have led to an increase in the discount because not everyone necessarily has got the same view about their valuation for Mediclinic. You still have a significant part of the NAV that is listed. If you think about some banking exposure and OUTsurance and some food exposure. But overall, a big chunk is now unlisted. So we need to get some news, I think, on the fiber deal that they want to do with combining Dark Fiber Africa with a joint venture with Vodacom. That could be positive for sentiment and decrease the discount. But overall, other than that deal, I do believe they should do more, because it's probably more than 10 years now, Remgro has quite significantly underperformed the all share. And it's got a very proud history of the years before that, when the Rupert family was more involved, of generating return above the all share index. A large part of that was because of British American Tobacco. So there was quite a clear difference in their relative performance when they unbundled that more than 10 years ago. But since then, it's been disappointing. So they probably need to do more. Otherwise, people will start saying, why does it exist? Especially because it's got a dual shareholder structure. So why do you buy into this with never having the same economic interest and voting interest? Your votes count for almost nothing because of the family control, and it's not in delivering on the economic benefits. So yes, I do think that something more needs to happen.
Ricus, your view on what could trigger a narrowing of the discount for Remgro and really more value for investors?
I can only agree with Jean-Pierre. The first catalyst would be a successful fiber deal with Vodacom, if they can get past the, I don't know, competition commission is too soft a word for them. But yeah, if that can get, if sensible people can make the right decision and say, well, having fiber in this country to people who don't have fiber is in fact very good, never mind competition. So that would be a catalyst. A changing in the guard, I would imagine, management style, although who am I to tell Remgro how they do their business? They've been doing it for longer than I've been alive. But that's what the market wants. It wants to see action, wants to see, oh, there's a new pathway to an increase in, not earnings, but earnings from sectors which are exciting. I mean, their fiber part was brilliant, but that happened 15, 20 years ago. We need something like that to really spur the attention. And that market discount will close not because necessarily things are all of a sudden more valuable, but because people are more positive towards the future prospects of the company.
Right, gents, more questions for you. Naspers versus Prosus. Is there still value in Naspers at the current price, or is Prosus a better entry point for long-term growth? This is an ongoing kind of comparison between Naspers and Prosus. Ricus, where are you at?
Well, over the past year and a half, if you just compare the price movements of Naspers versus Prosus, it's almost equal, except Naspers does a little bit than Prosus. Now that just taking a look at what your regression says, and at the moment, if I were to make the choice just on a technical basis, I'd be buying Naspers because Prosus has been doing better. So it's time for either Naspers to catch up or for Prosus to come back in line.
And yeah, is this actually, should this be based on purely a technical level, JP, since they basically are the same company?
Yeah, it's 99% the same. So you would look at technical factors. I would say it was interesting to see today a director, a previous financial director who's since retired on the board, has sold 20 million euros worth of Prosus shares. And late last year, the chairman also sold a big chunk of Prosus shares. So that indicates that on a relative basis, because they've got both, they've got Naspers and Prosus shares, that they perhaps see more value in Naspers shares. It could also be just because of their own personal family structures that maybe they don't pay too much tax on selling the Prosus shares, and they would pay more tax on the Naspers shares. So just be aware of that. As an individual shareholder, similarly, tax comes into the equation. Because if you own Prosus shares and you're an individual, that distribution they pay every year is not taxable. It's seen as a return of foreign capital. While if you get a dividend from Naspers, you would be paying dividend withholding tax. Well, the company would withhold it and give you the net dividend, not the gross dividend. So for an individual, you might say from a tax perspective, maybe Prosus is better.
Yeah.
But if you hold it in a company or another entity where tax doesn't really come into the equation, then I've also got a slight preference for Naspers, similar to what the directors are indicating.
All right. Well, gents, let's go into mining, kind of small mid-tier miner, Orion Minerals. A substantial part of my shares portfolio consists of Orion Minerals. I bought at an average price of 27 cents, and the price has been fluctuating for some time between 20 cents and as low as 17 cents. The company portrays a positive outlook, promising active mining at Oakkeep in the latter part of this year. Is it worth holding on to this share, or do I sell? I know that not a lot of people look at this miner. Ricus, would this be on your radar on any level?
It depends. Well, okay. First of all, it's still developing its mining operations. There's copper there, so it's not as if they're looking for, as if they're not sure about their reserves. I nearly spent part of my youth around that area in Prisca and in Copperton, so thank heavens I didn't. But yeah, so the stuff's there. What they need is to get the plant and the mining operational. Then they need to be the copper price when they get those operations going to be at the right level to actually make a profit. So you've got to think about the longer term prospects for copper, which is generally assumed to be good considering the amount of copper still to be used in electronics, etc., etc., etc. So it's a junior exploration developing company. I think it needs patience, and it needs to be looked at very carefully as they produce or announce results, whether it be from an operational perspective or on their earnings, to see whether they still have enough funding to continue their development of the mine. Or mines, they've got more.
Okay, yeah. The other question is there hope for a successful resuscitation of Orion in the near future? But as you've explained, still quite a lot that people need to look out for there. JP, there is a question specifically for you. It says, okay, JP, we are ready for your views on Capitec. And that is not a question. It's got an exclamation mark on it. Are you ready to give us your views on Capitec?
Look, I was a non-executive director on the board for 9 years. So I knew the company quite well before I joined the board from the outside, as a lot of analysts looked at it. Got some additional insights from the inside. And I must say, it's a very impressive company. Very good leadership team, very good strategy, very good structure, very good team of people. It's not just the CEO, who's really a very good CEO, Gerrie Fourie, but it's the whole team around him. So that means it's still difficult for me to be completely objective because I like the people, I like the company a lot. I think objectively it's one of the best companies in the country. And you can see that because it's one of the best performing shares over the long term. There have been books written about the company. There are a few people who are still a bit, I would say, cautious or skeptical about the company. Regarding that, I would say that when it comes to banking, there's always some subjectivity when it comes to provisions for bad debts. And that was a focus area for me when I was on the board to look at that in detail. And I was always comfortable that the provisions were adequate. And given that I'm still a big fan of the company, although for me at this price, it is expensive. The share is expensive. It has been expensive for a long time. I'm not. It might be. You might need something very strange to happen before it becomes cheap again. So if you ever can pick up the shares when they do trade at a cheap level, you should. But it's rare that that would happen. So while the company is delivering, the shares will stay expensive and probably continue in terms of the same growth per annum that the earnings are growing per annum. But it really is a great company, I would say.
There you have it, a BDTV exclusive. Ricus, there's a question on whether the Satrix S&P 500 ETF is good to buy into.
Sorry, was that the Satrix S&P 500?
Yes.
Or as we know it as the S&P 499 plus 1, where 1 is NVIDIA, because that's what's been happening with the S&P 500 over the past number of years. You're going to, if you buy the S&P 500, you're buying very, very, very concentrated, where your top 10 shares is about 40% of that value. I would be careful. We've just had earnings results from the Max 7, except for NVIDIA. And this is the first time in I don't know how many years that they actually did not beat analyst expectations, and they're sitting at very, very, very high valuations. I'd be careful to buy the S&P 500 at the moment, and I would be looking further lower down, looking at the next 50 or the Russell 1000 or something like that. But that's just my personal view, and I could be horribly wrong.
I have a different one for you, JP, quickly before we go to your stock picks, gents. On infrastructure stocks, the president touched on the plan for government to invest over 900 billion rand over the next 3 years on infrastructure. Which stocks are likely to benefit? I actually didn't look at the infrastructure stocks the next day. Not sure how they did. But yeah, do you think with this new plan that there may be some new optimism, some new money wanting to go into those stocks, or has it just been too long of a wait for people to actually put in real money into those stocks?
I think people are taking a wait and see approach because there have been so many promises of government before that have not come to fruition. And I would name 3 stocks that if these promises are actually delivered upon and we see a lot more activity in infrastructure broadly, building, construction, they might benefit. That would be WBHO. Years ago, they were mostly a road builder, and road building is still very important for them, but they do so much more than road building, and not only building of buildings, but also general infrastructure type of work. Secondly, Rawbex, similarly, not just a road builder, also a lot of exposure to infrastructure, even some contract mining, some renewable energy. And then the third one is Afrimat. If you think about all the aggregates that they would supply, cement now that they would supply, given the Lafarge acquisition. And they would probably benefit if there is infrastructure spend. Hopefully that means there's some infrastructure spend offshore as well in China. So the iron ore exports that they have exposure to might also do well. So those 3 stocks, I think, would benefit if we do see significant infrastructure spend. But it's a wait and see approach. We first need to see some money being spent there, not just go on the promises of the government.
On Afrimat, I actually did see Old Mutual, they're increasing their stake, so maybe there is something there. Let's get to your stock picks. Ricus, what are you choosing today?
Yeah, not to get confused with the S&P 500, stock pick is S&P Global Incorporated. People would know them as a ratings agency, but they they are the guys that value companies and countries, and they've been in existence since 1860. They've had 50 years worth of consistent dividend growth. Results were out earlier this afternoon. Surprise to the upside, price is up. What is interesting is that the section of their business is growing has to do with providing data modules and data applications to their customers. Where something like AI helps as well. And considering that S&P itself sits on a mound of proprietary data that they've collected for over more than 100 years, it's the perfect way to lever a large language model to provide something which is unique to their customers.
All right. Well, JP, let us get to your stock pick for today.
I'm going for a Swedish company, Evolution Gaming. I have chosen it before. I think it was roughly 9 months to a year ago. They give the content to gambling websites to a large extent. They're one of the market leaders, especially in live gaming, which is mostly blackjack and other card games where you have a dealer. So they have studios where it's real people shuffling and dealing the cards, and people play and look at the video through different websites. Similarly with games, whether it's all kinds of interesting games where you need to choose certain things or play games or crash a car, whatever, that's related to gambling. And the operating performance of the company has been very good the last 4 years, but the share price has traded lower the last 4 years. And the reason for that is a lot of people have grown increasingly concerned about their exposure to non-regulated markets, which means they sell their content to gambling sites which then operate in countries where there's not necessarily a law against gambling, but there's no laws. So it's a bit of a gray area. And investors generally don't like gray areas. And increasingly with that concern, people are therefore discounting the share, even though there's good, strong results. But I think we've got to a point now where the share is just too cheap relative to the actual results being delivered. And that a lot of these concerns are being addressed by the company. They are shifting more to developed and regulated markets where it is safer from an investment perspective. So with a very good track record and a lot of the risk being mitigated, I think Evolution Gaming could do much better from this point in time.
All right. Well, gents, thank you so much for your analysis today. That is all for Stockwatch. Thanks to our guests, Ricus Reeders from PSG Hall-in-One Ruimsig and Pierre Verster from Protea Capital Management. Moving forward, Stockwatch will be pre-recorded at 12:30 on Fridays. Be sure to send your questions early via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X at Business Day TV using the hashtag Stockwatch. Up next, though, the close. Stay watching.